President Trump today said China's devaluation will greatly weaken China over time. The president also noting that China's move means they're bearing the brunt of the burden of his tariffs. The president tweeted this: based on the historic currency manipulation by China, it is now even more obvious to everyone that Americans are not paying for the tariffs. They are being paid for compliments of China and the United States taking in tens of billions of dollars. China has always used currency manipulation, stealing our businesses, our factories, and jobs, hurting our jobs, and depressing our workers' wages, harming our farmers' prices, and not anymore. Tonight, Treasury Secretary Steve Mnuchin finally listening to President Trump, designating China to be indeed a currency manipulator. Two administrations preceding that of President Trump should have made that designation long ago. Our first guest tonight says President Trump's tariffs on China are not affecting consumers, and China is paying the burden of the tariffs. Joining us tonight, Peter Navarro, Assistant to the President, Director of Trade and Industrial Policy, and the Director of the White House National Trade Council. Well, we watched Wall Street, if you will, gin up a little business today as we watched the Dow post its worst performance of the year. Wall Street taking a beating, and investors as well, and putting it straight on tensions between the United States and an escalating trade war. Do you agree?
A massive overreaction, Lou. We have a very solid economy. The stock market should be a leading indicator of that economy. I think what happens in these kind of things is you get the day traders moving, you get a little trend trading, and before you know it, there's a lot of volatility, and good people lost some money today because they got shaken out of the market. But the underlying fundamentals are absolutely solid as a rock. Moving forward, I think we'll be just fine. The big news on the currency front, though, is important to the American people. When China, for example, devalues their currency by 10%,
we'll get into that, Peter.
Sure.
Let's slowly
stay on. Sure.
I know you're excited, and I don't blame you a bit. We both get excited. We're talking about economics and policy. But let's turn to what we have known for some time, and that is that China manipulates its currency. The previous administrations did not in any way, even though urged to. Empirically, it was obvious that China is manipulating its currency. They chose not to. The president has taken that step at long last. What special consequences will there be for China as a result of making that designation?
The Treasury Secretary, under two specific pieces of legislation, the 1988 Omnibus Act and the 2015 Trade Act, actually give the Treasury Secretary broad powers to take countervailing measures. The first step, however, is simply going to be to reach out to the International Monetary Fund, which monitors currency undervaluations, and start the process of cracking down on this. So we expect swift action.
When you say cracking down, what does cracking down mean? The president has applied tariffs. They're going into effect, more on the way by the end of this month. If there is not a substantive basis for agreement, what else in the way of cracking down?
There's countervailing tools the Treasury can use basically to offset the intervention of the Chinese. What the Chinese do, Lou, is they go out and they buy dollars and they do what's called sterilization in their own bond market. And what we can do is
not too far into the weeds here, Peter. You might lose me.
That's as far as I'm going to go. Countervailing and sterilization, I'll stop there.
The idea that the Chinese have posted this, a number of comments in the business press today, particularly talking about how this is a very big retaliation, stopping U.S. agricultural exports in their tracks, and further devaluing the yuan, going below the support level, if you will, at least of 7 to 1. In the dollar. This is, it seems to me, to be relatively tame stuff.
It is, Lou, and I think it's important for people watching this show to understand that Bob Lighthizer is still engaged with the Chinese. We're talking. There's going to be a lot of sound and fury out there, but at the end of the day, China needs a deal. We're going to be talking with them, even though this is important in the U.S.-China relationship.
But that's never been the issue, Peter. That's never been the issue.
Correct.
You guys have been wanting to talk, particularly the Treasury,
particularly the Treasury. Let's be clear about that.
Particularly the Treasury Secretary has been making it very clear he wants a deal and counseling the president accordingly. The reality is there is no deal. The president has made it clear they're still far apart. He wants one. He'll talk, as he says. But we're not seeing the Chinese make a lot of sense here. And as the president puts it, and I think he's exactly right, he says, I can take a deal, but if it's not good for us, I'm not interested. And what is it going to take for the Chinese to awaken to the fact that their economy is cratering?
Well, the president has been consistent going back to Mar-a-Lago. He's always willing to talk, but he's not going to put up with them failing to fulfill commitments like stopping the sale of fentanyl.
Yeah, so stipulated.
So there it is. So what do we do here? Chinese, look, we have a...
What do the Chinese do? That's what I'm most interested. Why would the Chinese, as I'm looking at the numbers, and those are cooked numbers, if ever there were cooked numbers, that they have been publishing to the world for 20 years, what should we expect?
China wants access to our piggy bank. They take $500 billion from us every year.
They steal hundreds of billions of dollars. That's pretty good access to a piggy bank.
So the president's basically standing up to China and say, you're not doing that anymore unless you change the structure of your economy and stop ripping us off. So that's their choice. We will work with them, but it's ultimately their choice. If they keep trying to rip us off, President Donald J. Trump will not stand for that. And shame on the previous presidents who let our 70,000 factories go abroad and lose 5 million manufacturing jobs. Not going to happen on Donald Trump's watch.
Well, shame on Wall Street, shame on the Chamber of Commerce, because they are also striking a discordant note, if I may say.
They are. They're wringing their hands right now.
Well, let me say this. This market today, in my opinion, is a reaction to that dissonance in the body politic here. We're watching the titans of Wall Street try to talk this president into a deal, even any deal. The business press, by the way, in large measure, is also doing the same thing, saying there's discussion that he'll take any kind of deal. It is really mind-boggling to me to see what you once referred to as these unregistered foreign agents of China, continuing to crow and to wheedle and to try to dissuade this president from a course that no president before him has had the guts to take.
Let me give you two pieces of good news. Finally, on Capitol Hill, there's something that they can agree on, bipartisan support for the China tariffs and China policy. But also, Lou, the American public has come to understand, because of the president's leadership, what the stakes are involved in, exactly what China is doing to us in terms of ripping us off. So that's a countervailing force to these Wall Street lobbyists and swamp creatures that want us to give up and just let China have their way with us. So we're in a good place now. The president's leading strongly on this. We have the market China wants access to. They're not going to get that access unless they clean up their structural act.
Let's go to that, because there is a structural element here, too. Because those unregistered foreign agents are making their presence known in the oddest ways. Yesterday, you were on Fox. A graphic came up from Goldman Sachs. Could we put that up? I'd like to just show everyone this, the graph that purports to show that tariffs are having an inflationary impact on prices. Now, there are many things I find interesting about this, but first of all, Goldman Sachs has blown up what looks to me to be a 3 to 4% differential in prices, at least they are representing occurred as a result of the tariffs. It makes it look like a mountain instead of 3 points. What do you make of Goldman Sachs and its influence on this discussion with peculiar graphics like that?
Well, I think the most remarkable thing about that interview by Chris Wallace is he insisted that graph was from the U.S. Labor Department, the Trump Labor Department, when it was from Goldman Sachs. It's the Mark Twain thing, lies, damn lies, and statistics. It's a jury-rigged chart. And the reality is, Lou, that China is bearing the entire burden of these tariffs through currency manipulation and through slashing prices. And if you look at inflation rates from 2018 to 2019, they're down, including on our imports. So the idea that we're paying anything, I mean, it's just Goldman Sachs. Yeah, they're the commander-in-chief on Wall Street of offshoring. Full stop.
Let me turn to that graph, because what kind of amuses me is, as I recall, the tariffs were staged and didn't go into effect, in point of fact, on $200 billion of tariffs for almost a year. I think it went from September that it was going to be applied, ended up being May the next year. Am I right about that? Because I'm just struggling to understand how a $20 trillion economy, its price index could be, let me finish, that its price index could be influenced by 4 points based on what would be, by my calculation, about $25 billion added to the retail level. Can you explain that to me, Peter?
No, I can. I try to look at Goldman Sachs numbers. Basically, Lou, what they did was they loaded the dice. I mean, think about it. China, the yuan started going up in March of 2018 and went up. It's up by down by 12% now, undervalued by 12%. Right. We have 10% tariffs on. How can there be any price effects at all during that period? We didn't go to 25% on the $200 billion until recently.
I got to tell you, those folks over at Goldman Sachs, you know, I see how they do pretty well. They're pretty good with that pencil.
Well, we make a lot of money offshoring our jobs, Lou, but people in Ohio and Michigan and Pennsylvania and Wisconsin, they don't much care for Goldman Sachs. They do not salute the Goldman Sachs flag, I can assure you. They salute the American flag, and they support Donald J. Trump.
Yeah, I think that's what's really sticking in the craw of the masters of the universe right now, and they better get used to it. You would think they had. Over a 2.5-year period. They must, for some reason, think they've got something baked into this particular race. I hope that they are, well, I hope they'll play it straight from here. Peter, it's great to see you. Thanks so much.
Nice to talk to you, Lou.
Give them hell. Peter Navarro.
You betcha.